Welcome to our channel. Get ready to learn the simple and effective way to secure a HELOC loan. Welcome to our channel. Today, we're diving into the simple step-by-step process to get a home equity line of credit, or HELOC loan. This type of loan allows you to borrow against the equity in your home, giving you access to funds for things like renovations, emergencies, or consolidation of debt. First, you need to understand what a HELOC is. It's a revolving line of credit secured by your home's value. That means you can borrow money up to a limit based on your home equity and pay it back over time just like a credit card, but usually with better interest rates. The first step is to check your credit score. Lenders want to see a good credit history. Generally, a score above 620 is preferred, but the higher the better. This helps you qualify for better rates and terms. Next, calculate your home equity. Subtract what you owe on your mortgage from your home's current market value. For example, if your home is worth $300,000 and your mortgage balance is $200,000, you have $100,000 in equity. Most lenders let you borrow up to 85% of this equity, but it varies, so check with your lender before applying. Gather all your financial documents, including recent pay stubs, tax returns, proof of other income, and details about your debts. This will speed up the approval process. Then shop around, compare offers from multiple lenders. Find the best interest rates and fees. Remember to look beyond just the rate. Consider closing costs and repayment terms. When applying for the HELOC, fill out the application accurately and submit all required documents. You may be asked to get your home appraised to confirm its value, which can affect how much you can borrow. After approval, you'll receive a credit limit. Based on your equity and creditworthiness, you can start using your HELOC funds, typically through checks or a credit card linked to the account. During the draw period, you will only need to pay interest on the amount you borrow. After that period, you enter the repayment phase, often with principal and interest payments. To manage your HELOC effectively, make sure to borrow only what you need and keep track of your payments. Missing payments can hurt your credit and may put your home at risk. Remember, HELOCs are a flexible financial tool, but they also require discipline and careful planning. That's the straightforward way. Secure a HELOC loan and make the most of your home equity. Don't forget to subscribe to our channel and like this video for more helpful financial advice and tips.